Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going through the comment section. I'm reading a lot of your guys' comments. I wanted to address a lot of the comments. Again, this is just my financial opinion. Guys, don't hold me to the coals if I'm wrong on anything, but I think I'm right. I've done a lot of research, probably more research than the majority of people have done. And I've done the research with a completely unbiased viewpoint. I don't have any bias. I just try to say, what is the data telling me? What is the data telling me? I don't listen to other people's narratives. I don't listen to any of that stuff. Does not matter. I wipe it out. And some people will say, oh, that's naive. You're not taking into consideration. Doesn't matter what their opinion is. It matters what the facts are and what the facts bared in history. And that's where that's why I started this entire channel, because I was listening to YouTube clips and I'm like, this guy's wrong. This guy's wrong. I couldn't deal with it. Now, I'm too passionate about this stuff. I like it too much to have people mess it up. And I'm gonna read through a couple of the comments here. So it says, Andy, would love to see you do a video on strategies for selling and taking profits. Getting in has always been a lot easier for me than getting out. And it is difficult, but that's why we have the ratios. The ratios tell us relative value. We are in the beginning of the beginnings. We are so far from selling, it's ridiculous. But the way that I would look at it, and we're going to go through a couple of consolidation periods here in some of these companies. A consolidation, so the markets don't go straight up. What it's going to do is it's going to go up very fast, and then it's going to consolidate for a long while. The up move might be a third or a fourth of the time. And then the consolidation period could be a good consolidation period of 3/4 of the time. So 75% of the time you're going sideways or more, or maybe not. Maybe sometimes the consolidation periods go up with it. It depends on the money flows and how the money's moving into the system. So the way that I would look at things is I would do it off of value. And I would do it off of how real estate. When real estate starts to fall in terms of housing starts, like really starts to tank and your inventory gets bloated and your house prices start going down, that's the time to start looking at your ratios. And if your ratios are pretty well valued, then I would start looking at the exit. But it's going to take years. It takes years for the housing market to turn and roll over. And that's where a lot of people get it all wrong. There's also seasonality in real estate. Real estate just doesn't go up. Everything cycles. We're going to go through a cycle. We're going to have real estate prices probably pull back a little bit for the winter. It happens every year like that. Last year it was a fluke year and it went way higher. We could continue to go higher in real estate, but usually it cools off in the August-September timeframe and then pulls back a little bit. Our cycle has been kind of messed up with COVID being shut down for 2 months. It's kind of coming back. So the selling portion right now, I'm holding on to everything. And you could put some things into free rides if you get worried, where you take out your original money and let the profits ride. It's a free ride. If you feel concerned at some point. But that's up to you. I do that with some things to build an entire portfolio of free rides. I have done stuff like that. Rick Rule is not talking about this uranium explosion. He keeps this to himself. He knows the effect of the Sprout Uranium Fund. I don't trust him anymore. Honestly, I've listened to him for many years. He's fine. I don't know. I'm kind of indifferent. I know a lot of his picks. I've watched a lot of his picks, and that's all I'm going to say. That's all I'm going to say. This uranium cake is delicious. What's the recipe? Equal parts of UROY, UEC, NXE, and one fat wallet to mix it in. Actually, those three companies are pretty solid companies. I own all of those companies. I own a larger stake in UROY now and NXE, and I own a smaller stake in UEC. My uranium cake is very well diversified. I probably mixed in a lot of fruit in mine, so it's got a wide variety of things in there. Probably a bunch of kiwi, and I probably even put walnuts and stuff in it. Starting to sound pretty good, huh? Well, the last couple of nails went into the coffin of the petrodollar last week with Russia signing deals with the Saudis and Nigeria. And I agree, it's the dollar, it's coming down, at least in the short term. And in the long term, I think it's going to head a lot lower. This is all going to be tailwinds to our investments in commodities. So yeah, we're gonna do pretty well, I think. It says, I love you, Andy, but it sounds like you should be afraid because housing is in a bubble and it's peaking right now. Not the same conditions as 2008, but it's still rolling over. I still think commodities are going to do really well, but the housing cycle is different. No. I disagree. If the housing market rolls over, it will smoke everything. Commodities will not do well. Stocks will get absolutely slaughtered. The problem is, I don't think housing's rolling over. I think it's a seasonal trend. We have record low inventories. We have 4 million home deficit. We have all of these things. Now, seasonality, when you look at the housing, just pull up any chart. You're going to see prices do this seasonal thing on an uptrend. We could be peaking for this year in 2021, and we could decline, or the rates of increases could come back a little bit. I wouldn't use sales as a number. Use inventory, days on the market, and home prices. Use those. And it has to be a year-over-year number, not a month-to-month. Because month-to-month, we could come back some. We're coming into a seasonal weakness in the fall, winter. So I think that home prices have never been, the home market has never been stronger. And the fact that we have such a diverse viewpoint from me and everyone else on YouTube, it seems like, is where they are getting it wrong, in my opinion. And maybe I'm wrong. Maybe the housing market is at a tipping point, and maybe we do go lower. I just don't think that because I don't see it in any of the numbers. The housing market doesn't turn in a month. It turns in years. I have people on my block that can't buy homes, and there's bunches of them. I have people at work, bunches of them, that can't buy homes. There's people everywhere can't buy homes. Does that sound like a market top to you? I think we're going to launch higher. We're going to see home prices that are going to blow your mind, is what my opinion is. I think we could go up 2 or 3x from here in some areas. Crazy, isn't it? We may even go higher than that. We might go from bottom to top of 700% because the inflation that's going to come, and you're going to see rent prices rocket higher in some of these cities. You are going to see them rocket higher. They're rocketing higher here. They're up 15% in a year and a half. And they're going to continue higher, in my opinion. There's no homes. No homes to buy, no homes to rent, no homes anything. We are way underbuilt. And I'm sure my area might be a little bit different than Colorado Springs, than other areas. And I understand that. But nationwide, I think we're going to move higher year over year. Are these companies in Africa very volatile for mining? I don't know what volatile for mining. You mean the uranium mining companies in Africa? The uranium mining Africas are volatile, but that's good if it's volatility to the upside, because then you're going to get massive up days. But yes, they are volatile. Andy, hypothetically, if we were to have a scare in the markets, is it possible for the price of uranium continues higher along with the equities, given the fundamental necessity, supply imbalance? We're looking at 2007 sell-off and decline that came unexpectedly for most in the sector, and thinking we could potentially face a similar fate as long-term holders. So I get this question a lot, actually. Is it possible that the overall market, when interest rates go up, is going to decline? And I'm going to say yes. I don't know what the dynamics is when they first start to sell off. What I think might happen is we're gonna rocket higher. We're gonna see this parallel. We're gonna see a parallel move higher, and then when they start to disconnect, when one does this and the other one's going to start to accelerate higher. This is stocks here, and this is our commodity stocks and commodities. When this starts to go, it may do this, and then just rocket higher. So it could have an impact, and we could go down with it. I don't think we're going to have a market crash, like a blowout crash. I think it's going to be a rollover, and then you're going to just see it basically go on down like commodities did for a long time between 2009 and 2019. You're going to see them just continue to go lower. So I don't know what the dynamic looks like in the short clip, but if you're a long-term investor, you shouldn't worry about it, in my opinion, because yes, it could happen, but what if that's 400% away? on one of your stocks, or 300% away. Then it starts to decouple. It takes a 30-40% pullback from your 500% or 300% or whatever gain, and then it rocket launches again. So the game of trying to time that scenario, I think, is the wrong outlook and paradigm, in my opinion. And you guys can still do whatever you want. But the way that I view it is, when you have the ratios that are really cheap, I buy into it. And when the charts look good, I continue to buy into it. And then on pullbacks, I just continue to buy. I view that as a pullback in a big secular bull market. So it's a very small cyclical pullback in a big, huge upward secular bull market. So I don't view that as a problem or even a risk. I mean, it's going to happen. I don't know what it's going to necessarily look like. And I don't know what the effects necessarily are going to be at that time. And if we do have it, I'm going to use it as a buying opportunity. So that's my viewpoint on it. And if you guys are worried about that, then you might have to take a different strategy than me, because I'm not worried about that. That's just me. That's my viewpoint. That's my strategy. And that's what I've developed for myself. So maybe some people, if you're really worried about that, and remember, we don't know the exact timing of this either. We could run in parallel. The NASDAQ and S&P could run and have like a blow off top and be done. And we could run parallel with it with our commodities, as people are transferring money over and the retail sector is getting sucked in chasing prices and FOMO. But if you're part of this channel, you're not in the FOMO camp. You're in the smart money camp, or institutional investor money, where we get in kind of early and then we ride it higher. We know valuations. We know technical analysis. We know the fundamentals. We know this stuff. You should be, if you're feeling scared of owning something, go back to the fundamentals. Go back to the technicals. Go back to all those things. Look at the market conditions. Look at real estate and what it's doing. Look at the 10-year yield. Look at the dollar and where it's going. Know those things. And if you can see it, you can, if the dollar starts increasing quite rapidly, if the 10-year starts moving on down has a problem. Up is not a problem. Up is saying that we've got inflation baked into this cake, and other people are thinking that they're changing their paradigm and selling their bonds and going into hard assets or something else. And we're going to see this money flow, and we're going to see people chasing things all over the place. And if you're part of this channel, you know that you don't chase. You look at value. You chase value, not price. Chasing value is the most valuable thing you can get out of this channel. Because if you get the value right and your timing's wrong, you'll still be okay. Because if you've got a long-term perspective. Now, if you can tie technical analysis to it, and you can tie market conditions like the real estate market to it, now your timings get real close. You're getting within a year or two. And if you're within a year or two, that's where big money can be made, because then you can time pretty well your purchases, your sales, and picking up other undervalued assets when that time occurs. We're not even close to that. At least that's my opinion in all that. So this channel is preparing you to hold through thick and thin, to be a long-term investor, to get your investment time frame right. Your investment time frame should be in years, not in months. Everyone's looking at this stuff, calling tops in a housing market with inventory where it's at, and on a time frame of like a month. That's like impossible. I mean, I'm gonna make this statement. Could be a bold statement, but I'm gonna make this statement. If someone's calling a market top from the conditions that we just came from in 1 month of data, they probably know nothing about the housing market. Absolutely nothing, in my opinion. Housing markets don't turn in a month. They turn in a year or two. You have to have inventory to turn. You can't just... The market's like this. It's like a train. Let's say it's a semi-truck train. All right, you've got like 7 of these big, huge, fully loaded let's say the semi-truck cab. Then you have all these semi-truck trailers, and there's 7 of them combined, and they're very heavy. They're fully loaded. You're pulling down the highway at 60 miles an hour. What these guys are saying is, I'm saying that we've got this big semi-truck with a cab, very strong engine, 7 things in the back. And I'm saying that in order for this to turn around, we have to slow it down. It takes a long time to slow down. So we slow down, slow down, slow down, slow down. We see all the signature traits. We see inventory increasing. We see days on the market going up. We see house prices starting to level off. We see all of these metrics turning. It's the brakes being applied to this semi-truck. But you can't turn around the semi-truck in 1 month. You can't just say, semi-truck turn, and it just stops on a dime, turns around, and goes the other direction. The housing market's the same way as this big semi-truck with 7 trailers on the back, fully loaded. You can't stop and turn it that fast. It doesn't work that way. It's like someone who's been lifting for many, many years. And someone says, hey, look, I'm going to start lifting. I've never lifted a weight in my life, but my goal is in 6 months, I'm going to be a 800-pound deadlifter. And somebody who's been deadlifting for all their life are just going to look at you and start laughing, because it's not possible. It's not enough time frame. It's not enough development. It's not enough work put in to be an 800-plus pound deadlifter. It doesn't work that way. Markets don't turn on a dime in 1 month. It doesn't work that way. You have to get inventory. You have to see things come online. You have to see things shift. And we could be seeing these things shift, but I don't think we're going to see the flood of inventory that some of these people are thinking. And maybe, you know what? I could be wrong. Maybe the inventory does come online, and maybe the housing market does turn. But guess what? It's temporary and short term. We're just exchanging the ownership of those people. You own the home. Now I own the home. I bought it. But guess what? We didn't increase the number of homes in the system. If we're still 4 million homes short, we are still 4 million homes short. The underlying structural fundamental conditions are so strong with 4 million homes short that you have to build them at some point. What that's going to do is, if these homes come online, if there's a bunch that do come online, and if there is, we'd have a short-term problem. It would soften. First, we have to get the inventory. We'll see the inventory come. Then we'll peak out. It'll maybe dip a little bit, and then guess what? All the inventory gets worked off, and we're back into a shortage again. It delays the problem. It doesn't solve the problem. It delays the problem, and that's my opinion there. And I can tell you what: if you are a smart, astute investor, you would view that as a buying opportunity. And I can't tell you when it's going to happen. Don't know all that stuff. If those homes come on, it's a big if. But that's my take on the housing market. And if we were to have a pullback, and could uranium be impacted? Maybe, maybe not. That's a great question, and I don't have the answer for you. If uranium would be directly impacted by all that, I would say yes, but I don't know. That's my guess. It would probably be, it would have an impact. I don't know how big the impact would be. Looking here, uranium kicking butt again. Yeah, I agree with that. Are those covered mostly long-term plays? Your analysis has imbued me to jump into the sector with both feet. Thanks. Mine are the ones that I am playing are for the entire bull market of uranium. I expect the entire bull market of uranium to last a pretty long time. So I'm a long-term investor. I took positions in 2020. I took overweighted positions. I heavily invested when I started this channel. I started the channel in August of 2020. And I was buying it all in that August, September, October timeframe in November. I was buying a lot. And I've been cost averaging in with money that I make from income, and I continue to cost average in. LPI and AR up huge today. Yep. That's good. In a portion of the gold bull market, when it's better to hold gold than the miners, would you favor senior gold royalty companies, gold itself, or a mix? If a mix, what sort of mix in percentage terms would you aim for? So again, guys, this is just my opinion. I like the physical metal because I don't have to deal with any of that. Then I like the royalty companies a lot. And then the mining companies I don't own as much. I really don't own many mining companies. I own the majority in royalty companies. And I like the smaller royalty companies for growth. And I do own some of the bigger companies like Wheaton Precious Metals, Franco-Nevada, Royal Gold. I own Sandstorm Gold, EMX Royalty, Uranium Royalty, and Gold Royalty now, Teuton Resources, and maybe there's probably some other ones I own as well. I just can't think of off the top of my head. So those, yes, I own mainly physical metals and royalty companies and not too much of the miners. I do own some miners, small silver mining companies and stuff like that. And that's where I have kind of the bulk of my other mining money is in that. I do have some mutual funds that are also mining related as well with precious metals. Any thoughts on Goviax? Goviax is, I think, an excellent company. They're a developer company in uranium, and the ticker symbol is GVXXF, and I like it. And yeah, Robert Friedland owns a stake in it, and it's backed by the Friedland family. He is a well-known mining, we'll call it financier, or however you want to say it. So yeah, I think it's a good company. So I'll end it there. We're getting kind of long here. So if you guys like this type of analysis, if you like the channel, subscribe to the channel. Just click subscribe, give me the thumbs up, help me out, and thanks for listening. This is Finding Value.